Okay, record. Okay, so guys, thank you so much for joining. I'm just recording this one, so we will talk. Maybe we will after this disconnection, we will connect again, and then we will talk about the queries. So today I'm just talking about what I learned from my experience, and when I talk with my different finance advisors, what I gain knowledge. That's I'm sharing with you. Okay, so I'm just copied the contents from here and there. Those are I can say I'm just following them. So guys, the first basically we need to understand whenever we are doing any business or anything, we need to follow some rules, right? So whenever we are right now we are talking about secret of wealth creation. So what are the rules basically we need to follow? The first rule that is everybody know, and that is don't put all eggs in a single bucket. Everybody knows. We will talk about this separately. Second one is don't follow blindly to anyone. So this is very important nowadays because there are so many channels are going on like Telegram, WhatsApp group, and so many things. So if you follow them, might be you will be in trap. Basically, you will exit with the losses like that. So that's why don't follow blindly to anyone. Okay, then invest 20% of your earning. Doesn't matter your salary is how much, So it's maybe less, it may be higher. Invest 20%. Okay, so I don't know what 20% means. Okay, for you. So just identify your net salary, and after your expenses, just 20% save from your income. Then keep 10 to 15% liquidity for any emergency. I will not stress more because everybody knows little bit this about this. To save your earnings or liquidity, just do these two things. If you don't have health insurance, that is medical insurance, and life insurance, that is a term plan, and don't take any rider on term plan. It's a pure term plan. Okay, so if you're having loan of 50 lakhs or 55 lakhs, just take term plan of at least 1 crore. Okay, so that is I can say you are saving your family from troubles if something bad happen to us. Another rule is don't be greedy. Every human is greedy, so that's one rule. Don't be greedy. When you become greedy, chances of losing money is higher. Then reduce loans with plans, because we are having some good loans, bad loans. So bad loans like we are having credit card loans, we are having some unnecessary loans, or maybe for gadget loan. We are having one car, we are taking another car on loan. That is a bad loans. And good loans like education loan and home loan like that. But whatever loan is, I don't understand. So I don't mind. You are having good loans or bad loans with you, just to reduce it. Okay, so whenever you reduce your loans, you will get confident and maybe better I can say health also. Don't increase lifestyle with increase in salary. It's very important, guys, because whenever we increase our lifestyle according to our salary, basically we are at the same level. So whenever your salary becomes double but your expenses are double, then basically your saving is nothing, so you are not beating inflation also. So it's a very important. Just think about it, how you are going to, lifestyle means, the unnecessary expenses, just avoid it. Necessary expenses on books, on your passion, definitely you have to spend. Okay, then assess your assets and liabilities. So for this one, I recommended already book Rich Dad and Poor Dad. So assess your assets and liabilities time to time. So what are your assets and what are your liabilities? So I will talk about assets and liabilities, but assets are the your resources which gives you return little bit, like you are having home loan, sorry, home without loan. So that is your asset because it gives you something, benefits. You are not paying rent to anybody, or maybe you are having house without loan and that's the rented one, so you're getting rent on monthly basis. That's your asset. And plan your goals. So basically we are planning everything. We are planning our trips, we are planning our career, everything, but we never plan our financial goals. So just plan your financial goals, uh, and I will guide you accordingly. Okay, that's next slide is don't give excuses. So I don't know how many people from here, okay, were with us. Those are not trading because of some kind of conditions, and those I can say treat as a excuse. So I don't have time. So if you don't have time in Indian market, equity market 9 to 3:15, do commodity market. Okay. So if you do commodity market, commodity start from 9 a.m. to 11:30 p.m. So maybe you can do trading maybe half second half of the commodity market. So that's not excuse for me. Then I don't have capital. Start with 50K, sufficient. Okay, no need to have big amount. So 50K is a decent amount to start your trading. Okay, 50K is sufficient. I started with 40K also, yeah, in past. But yeah, there are ups and downs also. But yeah, 50K is sufficient. Then identify and avoid dream selling people. So dream selling people, when I say dream selling people, means the people who can talk only, but they are not acting. So they are talking, they are giving you advice, but they are not doing anything. So just avoid those people, otherwise you will be in trouble. So basically sell-driven people are the agents, like bank agents. They are having targets. They want to accomplish something. So they don't care about your profits. They care about their targets. So avoid those such kind of people. Identify who is the agent and who is finance advisor. Okay. So always talk with your finance advisor. So advisors are not agent. Just be differentiate between the agents and finance advisors. Finance advisors advise you. They treat your money as their money, and they will advise you accordingly. Okay. So just avoid agents, LIC agents. Everything comes under that. Okay. So talk with finance advisor and take your decision appropriately. Then important things in our life. Definitely relations are important. Friends, family, everything. So relations in company, relations are important. Otherwise, it will impact your maybe little bit, a part of your brain. Relations are important to keep your health also good. So relations, health related little bit. Health, respect. Yeah, respect is important. Because if you give respect, you will get respect. So respect is also important. And the last, the things to do is, I know I started my investment at age of 29, not rigorously, but I started rigorously investment age of 32, because yeah, before that I don't have any knowledge about the investing and everything. But yeah, so see, the main thing is what we have to do these things, or maybe we need to advise our kids also. Start doing what at age of 20? Start investing. If he's getting job of 20, 21, start investing a little bit. So just make them some good advice, how to start investing like that, and what is the advantage of that starting in early age of 30. Start passive income. I will talk about passive income afterwards. Age of 40, right now we are 30, so start passive income. Okay, so think about it, how you can start your passive income. Next, plan your pension at age of 40, because we are not government servant, so just plan your pension. Okay. Mistakes. So what are the biggest mistakes most of the time we are doing? We want to become quick rich. That's the biggest mistake. We want to become rich within 1 month or maybe 1 year, like that, because maybe you saw something video on YouTube and you want to be rich. So basically that short-term goal destroy you completely. Risk management is zero, then you will definitely. So risk management is very important. If you don't have risk management, definitely you will lose money. Journal writing. Journal writing is some people writing journal in books, notebooks. Like I'm doing my journals in notebooks, and end of the day, I'm writing my all profits and losses in Excel document. So journal writing. So journal writing is important. Why you made profit today? Why you made losses today? So profit today, that's fine. But why you made losses? You should write the reason why you made losses. Because market is volatile, because your position size is wrong, or maybe your entry is wrong, like that. So just risk and reward ratio, like that. You should put reason why you failed over there. Okay, so that's the journal writing. So if you are no writing journal, that means you will do the same mistake again and again. So writing journal is very important. So journal might be your notebook or maybe in Excel document. Changing instrument, because other making good money than him or her. So consider my one of friend is working doing in Bank Nifty, and he is making profits on daily basis in lakhs. But also just be aware that he will make the losses in the lakhs also. So main thing is what, if you are doing good in equity, don't change your instrument unless and until you get knowledge. So that's a very, very important thing. Change instrument means your equity market or futures, or maybe you're doing F&O, okay, or you are doing commodity or currency like that. So don't change your instrument because you are good at that, okay? Don't change your style unless and until you are in losses like that. Then just after this lecture, maybe you can, after this session, you can see this video, 1.2 crore loss. This is Abhishek. He's a nice talker. So just refer this video, how people are doing revenge, you know. So if I lose my 1 lakh rupees, I will put 1 lakh rupees, 1 lakh in my trading account. And again, I will lose that 1 lakh. So basically 1 plus 1, 2 lakhs loss. So that's the main thing when we do revenge with the market, okay? So that's a good video. Just I will recommend, guys, just go and watch. Then there are 3 types of incomes: active income, passive income, and extra income. So can you mute yourself? Somebody, I think we will talk separately, but somebody, I think. Okay, I will mute 1 minute. I don't know what happened, but yeah. Okay, so 3 types of income. Right now, everybody having active income. So we are doing we are salaried employee or maybe business or something. So we are getting salary. That is active income. But right now, we need to think about the passive income. So passive income might be just purchase one property. That's a loan free, definitely. If it is loan free, then it's your asset. So if it is loan free and you are getting income, that is a passive income. You are not doing invest anything. You are doing just purchase that property with your money and you are getting passive income. So that is a passive income. Farming. So someone is doing farming on behalf of you, right? So you are having 1 acre or something, you know, in your at your village, and you are providing some, you know, financial assistance to them, and they are doing farming, and you are getting money from them. So it's a passive income. You are not doing anything. Share market. So if you are investing in share market, I don't know how many people are sharing, doing investing in share market. Then if you are doing investment, you are getting dividends. And right now, if you are getting dividend in 2000, 3000, but at one time, whenever your investment is more than 20 lakhs or 30 lakhs, you will get at least dividend minimum 20,000. It depends on whether you are a fan of dividend stocks or maybe good stock, because some good stock also, they are not care about dividends. So dividend is not, I can say, main theme. But yeah, if you are having some good stocks which are good fundamental and giving dividends on regular basis, like NMDC is there. There is NMDC is a one stock giving good dividends. Another stock is NTPC giving good dividends. Then we are having SAIL, SAIL, SAIL. Right now having good attractive price 101. SAIL is a one good stock giving dividends. So these dividend stocks are the safest stock, and maybe if you are invested in them within 20 years of span, your amount will be risk free because you are getting good dividend, and maybe after 20 years your stock price, whatever you paid to them, it will free from your dividend. So that's also good. So again, identify the good stocks for dividends also. Don't purchase stock for only dividend, otherwise it will make trouble to you. I will share books, guys, also. So yeah, writing books. I don't know how many people writing books, but yeah, if you are writing books, you will get royalty on books. Okay. So if you are writing books and if you already published, you will get royalty. That's passive income. YouTuber. So YouTuber right now, last year I started my YouTube channel, but definitely I just started. But you can see all these peoples are publishing their videos on YouTube. Why? Because whenever you accomplish minimum, according to my knowledge of YouTube, the paid versions, like if you're having subscribers more than 1000 something and 400 hours watching like that, you can start your earnings. So you can enable that. There is a one setting, you can enable that one, and your earning will start little bit. I don't know how much earning, but yeah, your depends on your watching time and how many subscribers do you have like that. So yeah, the YouTuber. So people are doing right now motivating you and everything. So if they are advertisements, so basically they are getting money, okay, from YouTube. Investment in startups. So there are so many startups, guys, where you can invest your money. If you're having excessive amount of money and if you want to invest in startups, You can invest in startups. And yeah, for this one, maybe I can guide you afterwards. But yeah, investment in startups. Just think about the business who having potential. Just think about the model of that business. Otherwise, most of the startup out of 100 startups, 90 startups will be collapsed. 10 startup will be survive. So before investing in any startups, you need to identify what is the model, what is the revenue model, what is the percentage of I can say profit. If they are selling product for 100 rupees, how much they are getting in hand as a real profit. So before investment in any startup, you should know the model of that startup. Okay, don't just invest because they are your relative. Okay, otherwise you are in trouble. Extra income. So extra income is, I can say, you are doing extra income and passive income. Difference is, in extra income, you are investing your time. Okay, in passive income, you are not doing anything. You are just investing your money, and money is working for you. That is a passive. Extra income is you are investing your time. Okay, so farming, you are doing farming. Training, like I'm training something sometimes, for cyber security on weekends. I'm getting good money from that. So that is a training. So identify your extra income sources, and just according to that, you allocate time for that extra income. Freelance projects. So if you are having good knowledge about something that is rare in the market, you can do the freelance. Okay, and freelance means you are getting project, you are completing uh, uh, okay, on maybe weekends or like that, and you're getting money. And the last one is active share market trading. So if you are working in India, maybe you can work, maybe you can do active share market trading, maybe in commodity market or maybe in currency, like that. Okay, and crypto right now, I don't know how many people are doing in crypto, but crypto is 24/7, so you can do in crypto also. But yeah, be cautious. I'm just an investor in crypto, not trader. Then next one is beat inflation. So whatever your investment, what was the time left? Yeah, I need to check the time. Okay, we are having good time. So after this meeting finished, guys, we will connect on the same link and we will talk. Okay, right now I'm recording the session, so whoever missed, they can refer this video. So just think about it, guys. I know the inflation is increasing. Some prices, prices are going high, some prices are still there. But the main thing is, what whenever you are investing, just think about, are you beating the inflation rate? Inflation rate is 5.5. So if you are doing FDs, definitely FDs, fixed deposits, are not beating your inflation. So just think about it, whether FD beating your inflation. And I'm not saying that FD is bad. FD is good. I will explain you. FD is good, but FD is not beating inflation. That means if you are putting your money, all money in FD, that means your money will be reduced next year by 0.5%. So if you are investing in FD, that money will 1 lakh rupees, 1 lakh rupee becomes 1,05,000, but actually that money is depreciated, okay, by 0.5%. It's not big amount, but definitely it depreciated a little bit, because inflation is, I consider, as 5.5%. If you consider 6%, then 1% you are losing money. So what are the different instruments in the market? FD, common, fixed deposit. My father told me this is the best asset, but best instrument. FD, gold, recurring deposits, RD, LICs, PPF. PPF is we can do in SBI or HDFC, like that. EPF, your employer is cutting from your salary on monthly basis. EPF, then NPS, approximately 8% return. SIPs, again, it's a risky, okay, because subject to market risk. So, and that's out of your control. That is SIP, okay, getting good return if you are saving, doing your investment for long term. Okay, short term, definitely you will not get return. At least if you are doing SIP, do for 15 years at least, getting good results. Trading, depends whether you are novice trader, intermediate trader, or maybe high skill trader. Okay, so trading, and the 10th instrument is invest in stocks. Long term in good stocks will create your wealth, health also. Okay, and patience is a key for the investing. Okay, so these are 10 instruments. There are so many other also, but I included little bit to compare. So if you revisit this. Can you see how many instruments are beating the inflation? Very few. So you are beating by RD by 2%, or if I consider 5% or 6%, 1%. Okay, so 6% inflation, so you are beating by 1%. LIC, insurance, and that you are not beating inflation, but you are getting insurance. PPF 7%, EPF 8%. One. So see, different instrument having different, I can say, outcomes. But yeah, the inflation is 6%. Consider. Manage your risk. So I told you, don't put all eggs in a single bucket. What it means? It means whenever you are having 10 rupees, you should divide your 10 rupees in different buckets. So divide your bucket means do maybe 3 rupees FD, 4 rupees maybe recurring deposit, and maybe invest your remaining money in share market, like that. That is a diversification. Okay. Uh, don't expect same return from all types of instruments. So don't expect, if you are getting maybe 20% return from one bucket. Okay, so if you are investing in something where you are getting 20% return per annum, don't expect same return from all instruments. It is I can say this is a trap. If you are expecting same return, then what you will do? You are putting your all money in that 20% bucket, and it happened that if that 20% bucket may be collapsed, your money will be zero. Okay, so and assess your bucket. Third point is assess your bucket time to time. Just check, whether your buckets are performing very well. If they are not performing well, just close it with the loss. That's fine. If you are invested in some firm with 2 lakhs rupees and that firm is not doing good, just remove your money. Don't expect interest on that. Just remove your capital at least. Okay, and that's very important. Then why people are attracted towards share market nowadays? Because due to pandemic, people feel or maybe they need real secondary source of income, because now in pandemic they feel they need to have some secondary income, because so many people lost their jobs, or maybe they suffered from some medical emergencies. They lose their total liquidity, what they earn, saved. They'll totally spend their savings for medical reasons. So this is, I can say, that's why people now think about, we need secondary source of income. That is a passive income. Okay, or maybe extra income, like that. Also, some months before, some movies are released, like 1992 Scam. Then there is a Big Bull movie. Then there are some YouTubers showing the profits in crores. One of the YouTuber, I like him, that is Subhashish Pani. So Subhashish Pani, you can see there is a video, you can click on how he made profits. So yeah, definitely he is a good trader. But yeah, and also the third point is flexibility and free time. So we are getting free time. So in that free time, we are getting, because we are doing work from home. So maybe we are saving our time. Maybe you are traveling 1 hour daily. So 1 hour, it's a big time, right? So 1 hour you are saving. That means you can say, spend that time in market or maybe with your family. So that's, I can say, advantage, and that's why people are attracted towards share market as a secondary source of income. But the reality is, we are doing 4 years of engineering. We are having 10 minutes, guys. So I will wrap up in 10 minutes. Okay, and we will connect again. So 4 years of engineering we done. So many theory exams, practicals, vivas. Okay, we sacrifice. The spelling is wrong, I think, but sacrifice our happiness, sleep, and then we are getting salary. We got salary of 20,000 for 25,000. I started my career with 8,000 rupees. Okay, so that's basically we invested 4 years, and then we got some salary. But in share market, ask this question to you: how much time you spend on learning about share market? That's a real question. If you are learning just watching CNBC channel, definitely you will make losses. CNBC channel, I'm not blaming CNBC, but yeah, some channels, So if you are watching some channels and you're getting calls from there, definitely you will make losses. So yeah, so just invest your time in learning and start your trading maybe next year. create your share market rules. Yeah, so just read guys afterwards what are the different rules we will make. Okay, and I will skip this part. Then why SIP and okay, why demat account is needed. So I consider you should have both SIPs as well as demat account. Why? Because having SIP is not only worth, because demat account, if you are holding some shares like Tata Power, Tata Motors, or maybe some Dixon like that, you will get dividends, you will get bonuses, you will get splits, you will get buyback offers, you will get demerger benefits. So basically you are partner of that company. In SIP, you are not getting those kind of benefits. Okay, so if you are saving 10K per month, do SIP of 5K, 3K in SIP, 2K in another SIP, and 5K purchase good stocks on monthly basis. So like that. So just this is my recommendation. Rule 72. Rule 72 is, guys, what? So whenever you are getting 8% return annually, that means your money will become double within 9 years. If you are getting 24%, like consider my friend earning 2% on monthly basis from market, then his money will be double. So his yearly income is 2 into 12, 24%. So he will get double within 3 years. So if he invested 1 lakh rupees, he will get 2 lakhs rupees after 3 years. So this is a rule 72. Okay, that you need to understand. Plan your expenses, guys. This is Excel sheet I will share with you. Just plan your expenses ahead, so you will get some idea how you can plan your expenses. Okay, next. Then I will share the strategy and then I will talk. So I will complete the first slides and then I will talk about, okay. The guys, the next slide is how you can start your trading. Open your account on Neo Stock, 10 lakhs virtual balance. Start with that 10 lakhs. Don't trade with the 10 lakhs rupees. Think about you are starting your trading with 50,000 or 1 lakh rupees. Then start your trading with 1 lakh rupees only. And you can judge your trading style. It's a virtual money. So profit is virtual, loss is virtual. So don't worry. So you can refer this, or maybe there are other platforms also. Then courses. There are free of cost courses. No need to attend any course, guys. There is a one course, Stockage Founder course, Vivek Bajaj. Refer this link. Go with the course. Okay, 33 videos, I think, up to the point. Refer. Start your video from 1 to 33. Power of Stock. These are another videos, and I'm just referring this Nifty index levels from Power of Stock and Codevisor. Okay, so this is not recommendation, but yeah, I'm just referring these guys. Okay, next one. I'm having less time, guys, 6 minutes, so that's why I'm a little bit half-fast. For equity, I'm referring, guys, for good stocks, because there are 6,500 stocks. How I can choose the stocks? I'm referring Stockage. Okay, so I'm having my premium account on Stockage, and I'm using Stockage. So consider 1 minute. I will show you that afterwards. Then next one is financial diary. So I will share this PDF document, financial diary. This is very important document, guys. If you don't understand, just ask me anytime and ping me. This is document where you can put your how many bank accounts you have, how many investment do you have. So your family should know, your loved one should know, your wife or maybe your mother or father should know. Put nominee for each your investment. That's very important, guys. Nominee is important. Then books to read. I will share these books. Rich Dad, Poor Dad, I believe you have. If you don't like to read books, go to YouTube and there are some summary of these books, and you can refer those videos. Okay, and you can listen those. Nowadays, books are available in audio formats also. Then I will share these books. Come to my trading room and how to avoid losses and earn consistently. Okay, I will share these books, 2 books. Then financial pictures. Just after this lecture or video, just refer this diagram and identify your investment in actually, distributed across which sector you are saving something. Are you saving? Are you having financial protections like that? Okay, so I will show you how I choose the stocks during my trading. So this is my Stockage account. So Stockage is I already told you, right? So if you don't have paid version, you can use freely available, but yeah, it's not too costly. And here you can go, yeah, like you can click on candlestick pattern and you can see hammer or bullish engulfing candle. So I can go with the bullish engulfing candle, and you can identify out of 6,000 stocks, you will get real, I can say, filter stock, and on those filter stock you can do trading. So if I go to scan, and if I go price action, and I want to see breakouts, 52 weeks breakout, and the stock breakout, okay, stock closes above 52 weeks high, so chances of doing better than that. So you can do the, some position for a couple of days, and that position will make you wealthy. And that position, maybe you can earn 5%, 2% is also fine, but yeah, you can identify which are the stocks you break 52 weeks high and basically close above that. So, and you can get the list, and accordingly, don't trade blindly. See the charts, okay, of that stock, see the fundamentals, see the results, and then enter in that stock. Okay, don't blindly enter. The next one is, I will share this Excel document, guys. So consider you are doing trading, and you are getting, maybe 5% on monthly basis, not trading, but you are doing FD. So FD, if you are getting 5%, your 1 lakh rupees become 2 lakhs after 14 months, 14 years, right? Why? Because there is a funda called as Rule 72. I explained you. So within 14 years, your money will get double. Next, if you are getting 8%, that is NPS, National Pension Scheme, 8%, your money will get double within 9 years. Why? Because rule number 72, 72 divided by 8%. So your money will double in within 9 years. Next, if you are share market trader, and if you are earning 2% on daily basis, not daily, sorry, monthly basis, 2%, that means yearly, 12 into 2, 24%. So your money will double within 3 years. So 1 lakh become 2 lakhs. Next, monthly expenses. I will share this Excel document so you can track, guys, add more, delete whatever don't have, you don't need. I'm doing FDs also, guys, for my flat maintenance. I'm paying 15,000 on yearly basis. I'm doing FD for that. Why? Because I don't want to keep that saving separately. So I'm doing FD for that also. Then this is a miracle, guys. This is some strategies. Maybe we will drop and we will connect again, because we are having only 1 minute and 20 seconds left. But I will explain within that time, and we will join once again with the same link. So, guys, if you are doing 5% income on monthly basis, and if you are starting, from first month, so after 100 months, your 1 lakh become after 100 months, your 1 lakh become 1 crore 25 lakhs 23,929. So it's a compounding. So if you are a good trader, then I will say you will earn 10% on monthly basis. So you need 50 months to reach this goal. And if you are pro trader, like you are very good trader, full time you are doing trading, then if you are earning 20% per month basis, then within 2 years and 3 months, you will 1 lakh become 1 crore 25 lakhs 23,929. Okay, so this is the beauty of power of compounding. After this session terminated, we will connect again, and I will explain my strategy, not this strategy, okay, but my strategy. Okay, so guys, I will stop recording 1 minute.